Okay, let's unpack this 22 crore investor accounts on India's national stock exchange.
Wow.
That's a number that's hard to even wrap your head around.
It really is.
And in the last fiscal year alone, 18.7 trillion in capital was raised. Think about the sheer scale of that.
Absolutely. Those figures aren't just abstract numbers. They represent a hugely dynamic financial landscape in India with the NSE right at its core.
Exactly. And for this deep dive, we're going straight to the source. We've got the NSE's own investor presentation from May 6th, 2025,
hmm
covering their performance in the last quarter and the entire fiscal year. This is like getting the inside story, seeing how they see themselves.
Yeah, and what makes an investor presentation like this so useful is that it's their curated view. They're highlighting what they think is most important.
Right.
So our job really is to analyze this information and pull out the key insights for you without getting bogged down in excessive jargon.
Perfect. So let's start with the big picture. How does the NSE frame its overall position in the market?
Well, they lead by emphasizing their role as India's largest real-time financial ecosystem. That's their starting point.
Okay.
But beyond India, their global standing is particularly impressive. They highlight being the second largest equity exchange globally by the number of trades.
Second largest for equities, okay.
And notably, the largest derivatives exchange worldwide by the number of contracts traded in calendar year 2024.
Number one for derivatives, that's huge.
It is. And that dominance in derivatives is fascinating. It sort of suggests a maturing market, maybe more hedging activity, perhaps growing sophistication among participants.
Yeah, that makes sense. It's a key indicator of market development, right?
Exactly.
So second for equities, number one for derivatives. What else puts them on that global stage?
They also proudly state they facilitated the highest amount of equity capital raised in primary markets globally in calendar year 2024.
Wow, highest globally for capital raising, too.
Yep. So it underscores their critical role, not just in, trading existing shares, but as a primary way for companies to actually raise new capital.
So they're not just a marketplace, they're really a launch pad for growth.
Precisely. And their business isn't just one thing, is it? It's quite diverse.
Right. What does that look like?
Well, it encompasses the trading services we typically think of, but also vital listing services for companies going public.
The IPOs and all that.
Exactly. And the crucial clearing and settlement processes, making sure trades are finalized securely. Plus, there's a segment they just call Others.
Ah, the others category. What falls under that umbrella?
That includes really essential infrastructure like their data center and connectivity.
Okay.
Also, the market information provided through data feed and terminal services, and their index licensing and data subscription fees.
Ah, like the Nifty indices.
Exactly. Think about how widely used Nifty is. In fact, they mentioned a remarkable figure. 73% of the total industry assets under management for equity and debt passive funds are linked to Nifty indices.
73%. That really highlights how central their benchmarks are.
It certainly does. And to illustrate their reach across India, they point to coverage across 99.9% of PIN codes.
Pretty much everywhere, then.
Basically, yes. They also have 2,720 listed companies and 11.3 crore unique registered investors as of March 31st, 2025.
That's a truly massive footprint across the nation.
It is. And given that vast reach and the sheer number of participants, investor protection becomes absolutely paramount.
Makes sense.
It's an area they clearly emphasize in their presentation. They highlight a significant investor protection fund trust corpus, which stands at 2,459 crore.
2,459 crore. That acts as a pretty substantial safety net for investors, doesn't it?
It really does. It's good to know that's in place.
Definitely.
And their commitment goes beyond just, having a fund. They also reported conducting an impressive 14,670 investor awareness programs in FY25.
14,000 programs.
Yeah, reaching around 8 lakh participants. This proactive approach to financial literacy is just so important for maintaining a healthy and informed market.
An informed investor is definitely a more confident one.
Couldn't agree more.
Absolutely. Now, you mentioned earlier that massive euro 18.7 trillion in total fund mobilization in FY25. How does that impressive number break down?
Okay, so of that total, 4.3 trillion was raised through debt issuances.
Right. Yeah.
And a larger chunk,
Cut.
14.2 trillion, through equity issuances.
Right.
And if we drill down further into that equity component, 1.7 trillion was specifically raised through initial public offerings, IPOs.
1.7 trillion just from IPOs. We've certainly seen a lot of buzz around IPOs lately.
We certainly have.
So how many companies actually went public through the NSE in FY25? Does it say?
It does. The presentation indicates a total of 242 IPO listings on both the main board and the SME platforms in FY25.
242. That's a significant number of companies tapping into the public markets.
It really is, fueling their growth.
Okay, moving on to the bigger picture, the economic impact. The NSE also highlights its contribution to the exchequer through various taxes and fees. Can you elaborate on that?
Yes, this really underscores the NSE's role as a significant contributor to government revenues, beyond just being, a trading platform.
Right.
In FY25, they collected and contributed, get this, 48,439 crore in securities or commodities transaction tax.
48,000 crore in STT-CT2.
Wow, then there's 5,783 crore in stamp duty, 1,804 crore in SEBI fees,
Okay.
and a really substantial 59,798 crore in income tax and GST combined.
Nearly 60,000 crore just from income tax and GST.
Yeah, that alone is a massive injection into the government's coffers. It really highlights the NSE's significant role beyond just facilitating trades.
Yeah, those are enormous figures. It really puts the financial scale of the NSE into perspective and its broader impact on the economy.
Definitely.
So how did the NSE perform in terms of its market share across different segments? Let's look at the last quarter of FY25.
Okay, looking at Q4 FY25, they maintained, very strong market dominance in most key areas. Their share in the cash market was 94.6%.
Still incredibly high.
In equity futures, it was a commanding 99.8%, pretty much the whole market.
Almost total dominance there.
In equity options, based on premium turnover value, which basically reflects the total value of options contracts traded, it stood at 81.2%.
Still the lion's share.
And in currency derivatives, it was 93.9%.
Okay, so really dominant positions across the board. But how did that translate into actual trading volume growth compared to the previous year? This is where we see the activity, right?
It is. And this is where it gets more nuanced. While their market share remained high, the year-on-year volume growth in FY25 presents a mixed picture.
Oh, how so?
The cash market actually experienced a contraction of 16% in volume.
Down 16%. Okay.
Equity futures volumes were also down by 9%.
Down 9%.
And equity options premium turnover value decreased by 21%.
Down 21%. So cash, futures, options, premium, all down year on year.
Correct. However, currency derivatives completely bucked this trend.
Ah, I remember you mentioned growth there earlier.
Remarkable growth, actually,
Yeah.
up 84%.
84%, while the others contracted. That is a significant divergence.
It is. It really makes you wonder about, the evolving preferences and activities of market participants. What's driving that?
Yeah. Any insights into why we might be seeing such strong growth there?
Well, several factors could be contributing. Increased volatility in currency markets often leads to greater trading and hedging activity. That's one possibility.
Makes sense.
We might also be seeing growing participation from different types of investors, maybe retail or corporates in this segment, and potentially the introduction of new products or just increased awareness around currency derivatives.
So it's clearly a dynamic and growing area for them, even as other major segments cooled off a bit year on year.
Exactly.
Okay, let's shift focus now to their overall financial performance, starting with the consolidated figures, the whole group. What are the key highlights for FY25?
On a consolidated basis, FY25 was, financially speaking, a strong year. Total income reached 19,177 crore.
19,000 crore.
That's a 17% increase year on year. Revenue from operations also saw a healthy growth, up 16%, reaching 17,141 crore.
Solid top-line growth then. What about profitability?
That showed significant gains. Operating EBITDA was 12,647 crore, up by 28%.
Up 28%. Nice.
And profit after tax came in at 12,188 crore, which is a substantial 47% increase compared to the previous fiscal year.
Up 47%. Wow, that's impressive growth on the bottom line.
Very impressive growth numbers across the board, yes.
And the profit margins must look pretty healthy with that kind of growth, right?
Absolutely. Their operating EBITDA margin improved significantly from 67% in FY24 to a robust 74% in FY25.
74% margin. Strong.
And the profit after tax margin also saw a notable increase, going from 51% to 58%.
So better efficiency, better overall profitability for the group.
That's what it indicates,
Now,
yes.
the investor presentation also provides a quarter-on-quarter comparison. Were there any significant changes between Q3 and Q4 of FY25, the last 2 quarters?
Yes, interestingly, while the overall year showed strong growth, the consolidated Q4 FY25 actually showed a decrease in total income compared to Q3 FY25.
Oh, at a dip in the last quarter?
A slight dip, yes.
Hmm.
Similarly, revenue from operations and operating EBITDA also experienced a quarter-on-quarter decline at the consolidated level.
Any thoughts on why?
It suggests there might be some seasonal factors at play or perhaps other dynamics influencing their short-term performance toward the end of the year.
Interesting. So a strong year overall, but maybe a slight softening in the final quarter, at least when looking at the consolidated picture. What about the standalone financial performance, just the NSE itself, excluding its subsidiaries?
Right, and the standalone figures actually paint an even more robust growth story for FY25.
Even better. Okay.
Total income surged by an impressive 33% to 19,823 crore.
Up 33% standalone. Wow.
Revenue from operations increased by 14% to 15,433 crore. Operating EBITDA saw a significant 33% jump to 10,243 crore.
Another 33% jump for EBITDA.
And profit after tax witnessed a remarkable 69% growth, reaching 11,246 crore.
69% growth in standalone PT. That's huge.
It really is. And the fact that the standalone NSE shows even stronger growth than the consolidated figures suggests something interesting.
What's that?
It suggests that the core exchange business itself is performing exceptionally well. Perhaps some of the subsidiaries are experiencing different, maybe slower growth trajectories, which are kind of averaged out in the consolidated view.
That makes sense. The core engine is firing on all cylinders. And the profit margins for the standalone entity, did they also improve dramatically?
They did. The standalone operating EBITDA margin improved significantly from 57% in FY24 to 66% in FY25.
66%. Very strong.
And the profit after tax margin also saw a substantial rise from 44% to 57%.
From 44 to 57% PD margin, that really highlights the strong underlying performance of the core exchange business.
Absolutely.
And did the standalone entity follow the same quarter-on-quarter trend as the consolidated results with that dip in Q4?
Not entirely, actually. Unlike the consolidated figures, the standalone NSE showed significant quarter-on-quarter growth in total income, profit before tax, and profit after tax in Q4 FY25 compared to Q3.
Ah, so the core business finished the year strong quarter-on-quarter as well.
Exactly, which further supports the idea that the performance of the subsidiaries might have been the reason for that slight dip in the consolidated numbers for Q4.
Got it. That paints a clearer picture. Now, the NSE also mentions its key subsidiaries and the clearing corporation. What should we understand about their role? You mentioned key subsidiaries. What do these entities typically do?
Well, they specifically highlight that NSE Clearing was the first clearing corporation established in India.
A pioneer, then.
Yes, really emphasizing their role in building the market infrastructure from the ground up. They also proudly point out its AAA credit rating, which it's maintained since 2008.
AAA since 2008 is quite an achievement.
It certainly implies stability and reliability. While they don't detail every single subsidiary, the mention of key subsidiaries indicates a brighter ecosystem supporting the NSE's core functions. This likely includes areas like technology, data services, perhaps index management, or even investments.
Okay, so a whole support system around the main exchange.
Pretty much.
Finally, let's look at the trends in transaction charges for the standalone NSE. This is a primary source of their revenue, right?
It is indeed a very significant one. And the standalone transaction charges showed strong year-on-year growth overall in FY25.
How strong?
The cash market saw a substantial 38% increase in transaction charge revenue.
Up 38%.
Equity futures also grew by 38%.
Matching growth there.
Equity options saw a more modest increase of 1% in transaction charge revenue.
Only 1% for options. Interesting, given its size.
It is. However, remember earlier we saw the premium turnover value for options was down 21% YoY. This suggests maybe the pricing structure or mix of options traded changed.
Ah, okay. And what about the quarter-on-quarter changes for transaction charges in Q4?
When we look at Q4 FY25 versus Q3 FY25, we actually see decreases in transaction charges from the cash market, equity futures, and equity options premium value.
So a dip in Q4 transaction charges too.
Yes, which aligns with that slight dip in overall activity we noted earlier in some of the volume figures and the consolidated results for Q4.
Okay, that ties it together. So to bring it all home, what would you say are the most important takeaways from this deep dive into the NSE's investor presentation?
I think the key takeaways are pretty compelling. First, the NSE firmly holds a dominant position in India's financial markets, no question.
Definitely.
It also has a significant global presence, especially as we discussed in that derivative space. Second, FY25 was a year of really strong financial growth, particularly at the standalone level, with notable improvements in profitability and margins.
Yeah, those standalone numbers were impressive.
Third, they're clearly active in crucial investor protection and awareness initiatives, which is vital for market health. And fourth, they make a really substantial contribution to the national exchequer through taxes and fees.
Can't forget those huge tax numbers.
Exactly. So while there were some, quarterly fluctuations and dips in certain volume segments year on year, the overall trend points towards a robust and expanding financial ecosystem driven by the NSE.
And our aim here, as always, was to navigate through all this information from the presentation and give you a clear, insightful understanding of the NSE's recent performance straight from their own perspective.
Precisely. We've focused on pulling out the most relevant bits from their investor presentation to give you a comprehensive yet hopefully concise picture of where the NSE stands right now.
So, wrapping up, here's something to think about.
hmm
Considering the sheer scale and influence of the NSE that we've talked about, what opportunities or maybe potential challenges do you foresee this presenting for the Indian economy and for you as investors in the coming years?
Yeah, think about that interplay between their market dominance, the always evolving regulatory landscape, and those broader global economic factors.
It's definitely something to consider as you look at the future of India's financial markets.